Morning brief of the U.S. grain markets, September 16th. It's 8:32 a.m. I'm Rich Paz for Critical Point. We're looking at the December corn daily chart. We can see a trend line that's only tentative. We don't know if it's going to work or not. The market overnight popped above it, but that's not enough to be convincing that it's either not working or that it's some level where demand would actually jump in, or likewise will supply side pounce on the market. At any rate, the best forecast right at the moment looks like it's flipping between two sub forecasts. One is this is a level 3 top, level 3 bottom, very strange, normally doesn't work that way. That would suggest it's probably trading out over, probably will go higher over the next 4 days, but it could stall out as well. So watch this old resistance level here in the high 550s. And it still feels as though 550s is going to be used by the farmer as, hey, sell corn there all day long. We'll see. Obviously, maybe someday it won't work, but I think the idea is generally prices are probably going lower into next year. To me, 550s is going to be a significant resistance for a while. Now, another scenario is more like the wheat, and it's saying, no, you got a right for a level 3 bottom. You don't have a right that there's a level 3 top in here. This is going to be almost a perfect portrayal of a business cycle, level 3 business cycle, okay, like a U, okay? They sold, they bought, and they're going to sell. In this case, it's unlikely to move higher over the next 4 days. It's probably only going to move higher for another 2 days. So it can top this week, it can top early next week. We don't know yet. I'm fine with waiting. I don't have much for upside objectives here in that it looks as though it could go into those 550s. And that's why this 5-day rolling forecast is also showing a chance for 550s. If they snap this down for a level 4, then snap it up, we could do a critical point objective there to give us another more accurate, perhaps, upside objective for you. At any rate, I would say just kind of follow the swing here. It doesn't look like it's ending today, okay? Now, the daily stochastic is quite overbought, but it's not extremely overbought. The spread isn't extremely wide, but it's wide enough to say, there's a chance for lingering upside momentum. There's a chance the model will be right, that they're not yet done buying for this level 3 trend, okay? So I'm going to go, there's more upside, even though we could have a level 4, and this would be a level 4 right in here, okay? And we might have a little setback today, perhaps even in tomorrow, and then up. But it looks like to me overall, the level 3 trend is going to go higher, I think, at least for another 2 days, probably getting it into early next week. I prefer a top early next week. I think it can push it for that. Now, we will discuss later on in the week, or at least on the weekly update on Friday, how does this fit into larger trends? It looks like we could see trading range from now well into October before down into November is what it's shaping up out to be, okay? And so early seasonal low, early harvest low, perhaps, at least in the futures. We may see weak basis by October if the future's a little too strong. We'll discuss more of that, but just keep in mind there can be not only can it move up next few days, then down for a few days, but it could be right back up again, looking out over the next 2 weeks. But beyond that, we're probably going to see this market settle down some, and all of that's going to tuck inside of a long-term bear market. And to give you a little idea what we might be looking at come for the weekly update is we're experimenting with maybe a 5-month rolling forecast. I'm only showing 4 months here, but we're looking like it can bounce up into the level 1. Therefore, it might show strength into the start of October. Again, an early seasonal up move. And then it ought to move down again, and all of that's going to tuck inside of a bear market. So yes, I turned bullish here, and I turned abruptly, but let's not get too carried away with that. This is the L1, L2 uptrends normally don't perform that well this time of year, and it's because of harvest. So here's our November daily soybean chart, and the model is actually feeling a little more almost kind of like perky compared to corn. It's basically saying this is a 5-day rolling forecast, but we didn't roll it out So it's showing today, and for the moment, the market's actually doing what it was forecasting. It is warning it can be down by tomorrow, but it's also warning it could go either way tomorrow. It may consolidate, but it's suggesting going into next week it ought to be higher. And then we've run a critical point objective saying beans could trade to about 13.29 to about 13.43 going into a level 3 top next week. Then they should decline in level 3 bottom. And we don't know how much downside we're going to get. If we made a mistake of calling these level 2, level 1 bottoms for all three markets here, which really corn, I went ahead and called it, but it's really more of my opinion than the model. But if we made a mistake, well, then we're going to find out by early August prices were down, and that'll probably be our normal seasonal harvest low. Okay, and then we're just going to make the call again for another bounce, and that may lead to a better performance into year end. Whereas if the current call we've made to be bullish now in the next few weeks, that actually takes away the upside later in the year. So it's kind of like yippee skippy, we're bullish now, but it's kind of like it's taken away from the farther out bullishness that you'd like to see going to year end, because normally the seasonal is up by November and December. All right, at any rate, we don't know for sure if the market's going to trade this high for this time of year. But that's the forecast that at least ought to head towards it. The 5-day rolling forecast is saying not that high, but again, we put less emphasis on how accurate that's going to be. We want to see some of the fluctuation. We want to see the general direction and general volatility to give you a guidance. Now, with this stochastic, it's actually trying to widen here, suggesting a chance for lingering upside momentum, but it's also approaching overbought. I think the technicals are somewhat in line with this model forecast that at least the level 3 trader needed to buy for a few days, but we're making a forecast that the larger level 2, level 1 trader also needed to buy. Things are not rolling through the pipeline, harvest not progressing fast enough. They needed to buy. And I think it's more in the future, so it may be more speculative actually. But I think we're picking up signs the cash market still needs to try to maintain its pipeline. But again, even though it's acting bullish for these markets, the point is, I think most of the businesses and fund traders realize if you can hold out, you're going to get your hands on that corn and beans and wheat eventually here, because it's harvest time. But also keep in mind that the farmer has records amount of storage. These crops are huge, but they may not need to use all that storage. We could very well see the farmer slam the bin door shut a little sooner than normal. We also could see a scenario when the farmer's storing as much as possible, fast as possible, and then towards the end needs to dump a little, which may be why prices won't perform that well going into the end of the year. But working on the other side of this is that La Nina story. Does that develop for South America to give us a push? We also have stories of cancellation in soybeans from China, yet at the same time they're also buying soybeans. So it's rather an interesting scenario right now. Yesterday I thought the ethanol news was rather supportive to corn, and I felt like the cancellations in China were actually shrugged off by the market, so I thought that was a sign of strength. And I also felt like this is a sign the model was doing the right thing of at least a level 3 uptrend, saying somebody needs to buy something, because when you read between the lines of that news, it was saying, yeah, we probably got a little more demand going on now than we had going into the USDA report. Now on the risk side, if this market comes down and takes out last week's low, the USDA report low, not a good sign. Market's heading lower into the October bottom, and I'll be sorry for getting so excited and jumping on it. I'll be a little upset with the model saying, hey, if you want to jump on this, go for it. It can bottom this early. For the moment, I think this looks pretty good. I think both markets will work higher. Now this is our December wheat forecast, and unfortunately we don't have a good critical point, so we're not going to show any kind of box, but I did put a little more emphasis in this rolling forecast to give us an idea what could actually happen for price. Notice this bar here, that was yesterday's forecast and it worked. Notice this bar here, okay, is for day's forecast and it's kind of working. The model may slip into tomorrow. I'm sorry, the market may slip into tomorrow for a level 4 bottom. There's some alternate scenarios saying it could slip today and actually be up tomorrow. But overall, it looks like the market should go higher into next week, and we believe there's enough potential to put the market maybe up to around 732. And then it'll just be stronger resistance on up into early 740s, but also possible. And I like this widening spread of this stochastic, warning a chance of lingering near-term upside momentum, suggesting this model forecast, the 5-day rolling forecast, which is a little bit different at times, can work, that we're on the right track. I like the 5-day average rolling up. That's giving us a confirmation. Prices have been up long enough to assume level 3 rally, assume the model was right for making the call that level 3 bottom. And so we're just going to give it a chance. That's the best we can say. I will discuss by the Friday weekly update, I will discuss the possibilities of maybe it's not going to be long-term bullish into the end of the year as I thought. I think we're going to back away from that. I think we're going to put wheat more in line with corn and soybeans, but that doesn't mean we can't see some strength here in the next few weeks. That maybe we might even see wheat surge. If I could speak this morning, I think there's that possibility to still see relative strength in wheat than corn and soybeans here, just because of North Dakota, South Dakota, what occurred all year long, what's going on in Russia, parts of Europe, South America. All right, there's all the wheat you want. But the thing is, for many years, we've learned that a good chunk of that wheat just doesn't seem to be available, that the businesses need a higher price for it. So the standard economics have almost failed us over the past 5 to 7 years, having understanding of how wheat should be valued. And I think the trade is catching on to that increasingly. It's solidifying it, okay, making it work even better. Nevertheless, we'll discuss that stuff by the weekly update. At any rate, I do see, even though I see it going higher in the next week, I do see some selling next week, and then we'll discuss whether or not we're going to get another rally here. So don't be surprised if wheat backs off for a level 4. However, if wheat backs off to around 686, I'm going to be nervous something's wrong. Violation of last week's low would be a sign it's wrong. And if corn and soybeans are also going lower, I'd be concerned that we made a mistake. We called it too soon. Should have stayed with our seasonal aspect to the model forecast and waited for a bottom in early October. We're still up against that. Things could go wrong for us, but it looks like this market could show some stability over the next few to several weeks. But I'm now questioning how much upside going into the end of the month. Past results are not necessarily indicative of future results. Have a great day and thank you. And by the way, I just said towards the end of the month. No, I mean when upside might be limited going into the end of the year.